So, uh, hi, welcome to Ab India Karega Invest. This is Karthik here. Today we are here with another interesting topic for the day, investing in automobile as a sector. So to discuss on the topic, we have Mr. Sachin Trivedi. He is the fund manager at UTI Mutual Fund. He handles transport and logistics fund at UTI Mutual Fund. So to talk about topic, the flow of the program is going to be, I will just set a brief introduction about or the context about the program, and I'll hand over the session to Mr. Sachin, and then subsequently we'll open the floor for questions. We would love to take up as many questions as possible. Please feel free to post as many questions as possible. We would love to take or answer for most of them. Okay, so to set a context for this topic as a automobile as a sector per se, I think last 2 years have been one of the most exciting times for the Indian equity markets. We have seen a big roller coaster ride. Uh, 2020 beginning or before that, India as an economy in general, we were not in a great shape, right? You ask any expert, all of them were of the view that we had the regular systemic shocks coming into the market, whether it is demonetization, GST, or the COVID, which dampened the overall growth trajectory of the Indian economy. But the overall story saw a great turnaround post-COVID. At least the stock market turnaround and the early days of post-COVID or the first lockdown was phenomenal. The early recovery was actually credited to liquidity in the market, low interest rates, or US and other developed economies or central banks pumping in more and more money, liquidity into the system, which resulted in the market recovery. But subsequently, if you see last couple of quarters, even economy with all the three engines, that is agri, the industry, and the services sectors, have started firing, and then they are poised to grow stronger in the coming quarters. But even automobile sector also has seen a similar kind of roller coaster. If you see before 2020, especially starting from 2015 till 2019, those 5 years, leaving 2017 as one exceptional year, automobile as a sector itself has gone through bad phase. Especially 2018 and 19 were those years where people were skeptical of the view that now automobile industry itself is going through radical changes and all that, right? But then for 2020, all thanks to COVID, personal mobility was the in thing, because of which the automobile sector, the overall attention towards it itself picked up. So, what happened before COVID and what's happening now, and what is expected in the future? So, to talk on that, I would like to invite Mr. Sachin. We would love to hear from you, sir, to know what's in store for automobile sector and what are some of the factors one should consider for picking up some of the good quality companies or stocks in the automobile sector. We would love to hear from you. Thank you.
Thank you, Karthik. And thanks for all the viewers to join in. Like Karthik rightfully said that the market has gone through roller coaster, but all the more the automobile sector has seen the larger amount of pain. So obviously, last 1 year has been good in terms of return. But if you were to compare, let's say, a broader indices, which is to do with the auto sector, which is representing auto and auto ancillaries. So if you were to compare a longer term performance, 3 year, let's say BSE auto versus Nifty 500, which is a broader indices, this sector on a 3 year basis has underperformed by close to 45 odd percent. Obviously, 1 year story has been a bit better, but that's the painful period through which the sector has gone through. But there lies a story and opportunity as well for the investors. So just to put through where Indian automobile industry is and what kind of opportunities lie. So first and more important, we have clearly seen in past. So just to give you some numbers, India may be among the top 5 four-wheeler manufacturers in the world. But when we talk about penetration, that is how many vehicles owned per thousand people population, we are just around 28 per thousand, or let's say less than 3%. This number for some of the developed countries is as high as 50 or 60 odd percent. So that's the massive opportunity that lies in the country. So that's one very important factor. There are a whole host of things, and just to put this, we have clearly seen, let's say, a period where the nominal growth in the GDP has, let's call a couple of data points here, between '05 to '14. Average nominal GDP growth has been close to, let's say, 13 odd percent. That's the time when we have seen four-wheeler industry has grown by 11%, two-wheeler industry also has grown by 11%, but then came bit of a deceleration in the growth, let's say between 15 to 19. That's where we've seen subdued growth of, let's say, less than 8% in both the two-wheeler and four-wheeler industry. And especially 2020-21, which is a big part of a contributor to underperformance of this BSE auto index or most of the auto stocks, is period when the Indian economy, the nominal growth has been close to 1.4%, and the sector has seen close to 15.4% in two-wheeler and 9.9% decline in four-wheeler. So these are CAGR numbers, but just to give you an absolute number, between, let's say, from the peak of FY19 to FY21, two-wheeler industry has degrown by 28% absolute, and two four-wheeler industry has degrown by 20 odd percent. If we were to talk about one more subsector in this, which is a bit cyclical, which is the commercial vehicle part, it has degrown by close to, or let's say more than 55% in the same period. That's in FY21 over FY19. So it has been a massive pain in the industry. We will get down the reason behind this degrowth in the industry, but more so important, as far as sector is concerned, the sense is that good chunk of a good chunk of this is past, and from here on there will be a brighter spot. And obviously, one of the reason for me to pointing out this is clearly it's the massive underpenetration in the country. And as the income, like I have clearly pointed out, that with the nominal per capita GDP growth, we've clearly seen some amount or a good amount of linkage of how the vehicle sales grow. We believe that as and when the nominal economy picks up, per capita income grows, we will clearly see a reversal of this trend. So now getting into the reasons why we have seen this big decline. So just to point out, let's say from a period FY14 or even before that, sorry, FY4 to FY19, clearly there was a established pattern that the vehicles were become more and more affordable to people. That's basically, maybe you take it in terms of EMI, in terms of various other parameters. But clearly, the vehicles were become affordable. People were upgrading their vehicle. Obviously, the financial penetration was also good. So more and more financial institutions were looking to fund more of these two-wheelers, four-wheelers, commercial vehicles. But what has changed post 2019 is especially multiple regulations which are kicked in. This is for good of the people who drive these vehicles or who sit in these vehicles. These changes are, let's say, to do with the safety regulation. That's basically now every four-wheeler or every passenger vehicle we sit in, there is compulsory airbag for the driver as well as now for the co-passenger. Similarly, when you sit in a two-wheeler, let's say higher end bikes, there is a ABS brake which is compulsorily, now it's been made mandatory in those two-wheelers as well. Similarly, for lower CC bike, there is a CBS braking system which is there. There are several reinforcements which are being put in the vehicle so that it's more safer to drive. Then in between, the various courts have also said that compulsory today when you try to go and buy a two-wheeler, you have to buy compulsorily 5-year third-party insurance. Similarly, for four-wheeler, it is 3 years. So this is all for the good of the passengers who travel in them, but there are upfront costs for them. Apart from that, somewhere in 2017, we have changed over from, let's say, BS3 to BS4 norms, and post that we have skipped one full family, full generation of BS5 and straight away jumped to BS6 regulation in FY21. So all this has resulted in multiple cost pressures, and which is where the manufacturers had to take a price increase. Similarly, if we were to get in these cost pressures, now what we have seen come FY21 and FY22, there has been a massive a journey or massive cost inflation in terms of raw materials. Now, manufacturers have only one choice to pass it on gradually. But what it means is that higher cost for the vehicle owners. At the same time, manufacturers face the pressure because they can only pass on this cost gradually and not at one shot. Uh, so all these multiple pressures were there in last 3 years as far as auto industry is concerned. And top of that, we've also seen post various points which Karthik has just spelled out. We've gone through the GST changeover. Before that, we have seen the demonetization. Then we had seen one large financial institution facing some challenges, which has resulted in lots of NBFCs actually facing trouble 2 years back. And NBFCs are good financiers of the auto industry in terms of the for the buyers. So what essentially they have also done is they have also pulled back on their financing for these vehicles. So culmination of multiple factors, cost push, financial institutions pulling back, and the regulatory changes with respect to the emission. All of this, and we all know, like I said, that there has been a nominal income has been just coming one way down. So all these factors have resulted in pressures for the industry. But the good part, like I said, from here on, whatever we learn from various manufacturers, from regulators, is that most of these cost pressures are behind us. We are all looking nominal GDP to grow one way, which is up, and therefore the per capita income should also be on the rising trajectory. And that's the basis for us. And obviously, in terms of penetration, we have not improved at all. And there is a clear established trend when we see many of the developing as well as developed countries that once you cross certain threshold of income, your preferences go towards some of these discretionary products, and which is where auto, be it two-wheeler, be it four-wheeler, it clearly fits into that area, and that's clearly the source of opportunity lies. And remember, this is just one part of the entire speech which I just made. This is one part of the pain story as far as auto is concerned. Uh, but wherever the pain, the opportunity also comes for the investors. So the other part of the pain for the industry has been that, like I said, manufacturers all these years had just one choice to pass on these cost escalations to the end consumers, but very gradually, because something that you announce as a price today, you can't just overnight change it to the next level, which is where the manufacturers had to bear the brunt of this cost inflation. Their profitability has gone down. So last 3.5 years, what we have seen, not just the volume has gone down, so it has created a operating deleverage for most of these manufacturers and the people in the supply chain. But on top of that, like I said, in markets, people have enjoyed the rally for metal stocks, but somebody has to pay the cost for that, and which is where some of the end consumer industries have to bear the brunt. And similarly, these cost inflation has created pressures on the gross profit margin of the companies, associated operating deleverage. So what you see for the industry profitability today is far below the level which they have achieved in FY19. But clearly, if you look at the past trends, let's say 1 decade, 2 decade, this industry is a growth industry. We have seen in past such challenges for the industry in terms of raw material pressure. Clearly, the companies have managed to pass on this to the end consumers, and they have come back to their normalized level of profitability, which is where we are confident that over a period of time. So for the investors who is investing today, over a period of time, we've clearly seen that what they will enjoy is not just the improvement in the volume for these companies, but associated will be also the profit margin growth for most of these companies. So that's point number one, which I wanted to say, that from here on, investors who is looking to invest in auto as a sector clearly should, from 2 to 3 to 4 year perspective, look at or keep in mind the longer term trajectory for the industry, which is high single digit to early double digit kind of a volume growth. Associated with that, clearly, industry has demonstrated is the higher average selling price. Each year, they manage to take anywhere between 2 to 4% average selling price increase. And as you sell more and more featured car, we have seen that industry make more money in them. So no longer we buy a certain version of a low-end car of a manufacturer. People prefer to buy high-end or just below high-end kind of a version of a car, or similarly, that's a case for the two-wheeler as well. So that's the area of opportunity for the investors. So the other point, when we speak about auto as an industry, clearly people ask me about what's the situation on supply chain. And when we talk about supply chain issues, the people bring out the semiconductor related challenges. So yes, the fact is that semiconductor related challenges have played out for the industry in last, especially. So it has been a case for last 1 year, especially post COVID. But in particular, Indian manufacturers have faced pressures, especially in last 2 quarters. So what has happened? Just to give you some background, auto as an industry for semiconductor is close to, and this is a global challenge, not just the Indian challenge, semiconductor related issues. But auto as an industry is generally work on just in time kind of a philosophy. And last year, early March, when the manufacturers have seen that demand is likely to decline, they have actually cut back on their demand to semiconductor industry. And semiconductor, so and simultaneously there was a good demand from the consumer end of the industry, like a laptop or a phone. The other industry picked up the entire demand, and therefore, very soon when the auto manufacturers realized that the demand is quite healthy, they could not get back those supplies which they were originally getting, and which is where the problem started almost 1.5 year back. But now, because auto globally is an important piece of manufacturing, GDP contributor, the governments have actually, or the important participants in the governments have participated, put pressure, and which is where things are getting normalized. But more so in case of India as a case, the manufacturers have faced special challenges in a post second wave in India. Basically, this is the same time when Southeast Asian countries have also faced the second wave. They have gone through some sort of a shutdown. Supply chain got disrupted. But now we all know that some of these countries are back to normalized level. They are working overtime to fulfill the demand. So, which is where somewhere back 2 3 months back, when the manufacturers were saying that they were just working on 50% utilization, they are close to 80 85% utilization, and we are quite confident that sometime early part of the next calendar year, that is end of Q1 or early part of Q2, things should normalize. So that's where the companies will be able to go back, fulfill full demand. So that's also important, because what we have seen in last 2 quarters, although the demand is healthy, companies are not able to fulfill that, and associated problem with respect to reporting the profitability, because you're just fulfilling part of it. because you sell less, but your fixed cost, your salaries, your depreciation, your interest cost, everything remains the same. So the profits have gone under pressure. So that's one piece. The other point, people are very curious to know about what's going to happen with respect to electric vehicle in the country. So clearly, electric vehicle penetration in India is going to go up. Just to give you some number, this penetration. So on the fresh two-wheeler vehicles that we sell, right? If you were to talk about the data which comes from Vahan, which is the registration side, clearly what we have seen is that on the two-wheeler side, the fresh vehicles, the fresh EV vehicles account for around five odd percent or slightly higher than 5% of the overall two-wheeler population that is getting sold, or especially not two-wheeler, but especially on the scooter side of it, right? Just to give you some numbers, scooter account for close to 30% of two-wheelers sold in India. And if you do the math based on the number of scooters sold, this penetration for scooter is close to 5 odd percent in terms of new scooters sold. This number would be anywhere less than 1% for four-wheeler. But clearly, we believe that this penetration over a period of time in electric vehicle will keep going up, and more so in case of a scooter. Now, rest of the categories will take long time for the penetrations to go up. Yes, there are several manufacturers talking about introducing newer product, which obviously help in terms of improving the market. But there are a whole host of challenges. But my comfort is based on three factors, which is where I'm saying that the scooter penetration will go up. One clear factor is how much you drive in a day. So on an average scooter, on an average, any individual or the owner of a scooter drives it for anywhere between 15 to 25 kilometers. And most of these scooters offer a range of 80 to 100 kilometers once fully charged. That's where once you charge the scooter, it takes anywhere between 4 to 5 days for fully discharge. So once you charge, you can use it conveniently for 4 to 5 days. So that's one factor which goes in the mind of a buyer. The second factor is obviously in terms of infrastructure. The charging infrastructure, obviously, as a country, we are a lot poorer in terms of, I mean to say, the penetration is very less in terms of charging infrastructure. But since it is a scooter and you can charge it at home, there are various solutions which are coming in. This issue can be easily resolved because this can be a movable battery. This can be parked in your society with your dedicated charging infrastructure. Or once you, let's say, like I said, once charged, it lasts for 4 days. So the range anxiety in the mind of people is very less. Now, the third part is with respect to the cost, which is where the challenge lies. So the last two part of the challenge is very important, which is the number of charging station, which I said is not an issue in case of a scooter largely. But the third and most important factor is the costing. Now, on an average, let's say the leading manufacturer who has got close to a million kind of a booking. So what we learn, or let's say just to a cost of manufacturing some of these high-tech scooters is upward of, let's say, 1 lakh, anywhere between 1 lakh 40 to 1 lakh 60,000 kind of is the cost of manufacturing these high-end scooters. So that's where the challenge lies. Today, because government subsidies are quite handsome, so let's say just to in the FAME 2, which is the central government subsidy per kilowatt hour, let's say on an average, a scooter will have a between 3 to 4 kilowatt hour battery. So government is giving per kilo watt battery kind of a situation of anywhere around 15,000 per kilowatt kind of a subsidy, which means that government is giving you anywhere between 45, anywhere around 40 to 45,000 pieces of subsidy. This is the central subsidy. Obviously, this is capped at 40% of the vehicle price. But there is also a state level subsidy which kicks in. So today there is a good amount of subsidization which is happening both from the state and the center. which is where even the cost of manufacturing these vehicles is high. With subsidies, these vehicles are able to handsomely or properly compete with the ICE engine, which is the petrol-based engine, because even though those vehicles could be manufactured anywhere between 55 to 60,000, but there are heavy taxes on them, and which is where they, if you see the popular brand, would be selling at around 85,000 rupees. And some of these vehicles, the electric-based vehicle, the proper lithium-based, good range or good power vehicle would be costing you something like 1 lakh odd rupees kind of a end consumer price. So people are attracted, they are buying it, but the real challenge lies in how long will these handsome subsidies from the government will last. My sense is that there is only an absolute budget from the government. The real penetration will improve when the localization in the country will happen. That's where the cost will come down. And when the cost comes down at the manufacturer level, that's where the real penetration will improve. By then, customers will also, or the buyer will also get the experience of how these vehicles actually perform. So that's where the optimism lies as far as two-wheeler is concerned. Rest of the categories, the penetration will again improve, but it will take much longer than 3 4 years for the real penetration to improve, because you need lots and lots of localization, and that's a thrust area for government as well. Once that picks up, you will see a good level of production, and that's where you will find lots of innovation will happen. Innovation will bring cost down. Innovation will bring more and more buyer, more and more product. So that's the source of opportunity. So yeah, these are so clearly, as far as auto is concerned, we are very optimistic that the industry which is high single digit to early double digit volume growth industry, plus on top of that decent average selling price increase each year. This industry should see a good amount of growth. And this should be, obviously we can't say that this is going to turn around in next 6 months or 1 year, but from what we've seen in the past trends, we are quite comfortable that this growth should resume. And the factor behind this will be low penetration, improvement in the earnings of the people, and finally the cost increases largely should be behind us, which means that the companies will not only get the operating leverage, good top line growth, but they will also get better than that in terms of profitability growth. So now I'll just stop here. I think I have spoken a lot. I will just request Karthik to throw this open for questions. Karthik?
Yeah. Thank you so much, Sachin. I mean, the lot of
Sorry,
interesting.
Karthik, you're not audible.
Can you hear me now? Can you hear me, Sachin?
So,
Okay.
Karthik, sorry. Let me just try.
The backstage confirms that my voice is audible.
Karthik, can you hear me?
I can hear you. Sachin, I think there's a.
Let me, Karthik. I have my colleague has given me a couple of questions. Can I take them?
Yeah, please.
It's there on the screen. Yeah, I'll just take them. So the first question which I've got is that what factors should be considered by investors who want to invest in the auto industry? So I guess obviously I have already spelled out the factors which investors should be looking for in terms of next 3 to 4 years. By the way, this is clearly like penetration is the most important theme behind what we are talking about. But more important factor is how the volumes are going to turn around, because clearly volumes will drive operating leverage, and operating leverage will give you that multiplier in the profits. So I will say that that's a very important factor for everyone to look around. Obviously, this industry, like this industry which I not spoken about, this industry, we have exposure to auto ancillary stocks as well. So for auto ancillary as a stocks, uh, uh, um, which is forming part of the auto, which is forming part of the auto as a sector. There again, the more important factors we should be keeping in mind is that how better companies are adapting to new changes. That's true for OEMs as well. So remember, there is one thing in mind of most of these players is that whether to support the existing structure or to go put down a lot of money for the new structure, which is the EV as a new piece which is emerging. Obviously, from shareholders' perspective, it's important that whatever the companies manufacture, they should be creating that category as a winner. Remember, there is only one leading brand in US, and that's what is in terms of I can't be name specific, but we all can guess that name. But there is only one leading brand which is driving the most of the volume. Now, this is only possible because customers have gained confidence on that specific brand, that specific name of vehicle. Why this is important is because that's where because the top two or three guys who make most of the money, and which is where the winners actually emerge, and then there are multiple challengers who actually kicks in. But remember, everything surrounds how you create that winning proposition as far as this industry is concerned. But in a nutshell, if you were to look at from the very near term, what works is how the volumes are going to pan out. For that, what all new vehicles which the manufacturers are looking to actually bring in. Because remember, this entire pain point which I've just described, which is changeover from BS3 to BS4, BS4 to BS6, and associated safety norms. All of this has actually resulted in manufacturers focusing on those areas, and they've not been able to drive newer volumes, newer products. But very soon you will see all these manufacturers will bring newer models. Newer models bring people to showroom, and then that attracts the volume as well. So yeah, I'll just stop that. Next question which I have is how the semiconductor chip shortage problem affected the auto sector. What is the current situation? I guess I have answered that, but how this has impacted profitability? Obviously, you let's say you are planned to or you are geared to produce 100 units, but you've just produced 50 units, which means that you have paid extra salary to people. You have, let's say, you hired two people to manufacture 100 vehicles, but now you could do well without with just one guy to manufacture the 50 vehicles, but you still have to pay for both the guys, right? So to that extent, your profitability has got hit. And this is not just this is not proportional. This is actually a lot more than that, because for that 100 vehicles, you could have drawn 20 rupees as, let's say, just hypothetically 20 rupees as a profit. From that, you would have paid 10 rupees as a salary. But today, with just 50 vehicles, you made only 10 rupees of profit, but you paid 10 rupees of salary. So, which means that your profits is materially impacted, which will all reverse once the volume comes back to the normal level. But our sense is that I think Q1 of next calendar year or Q2, we should be back to normalized level. What would be the top three key positives to see in auto sector keeping next 2 to 3 years? Yeah. So the question is, what are the top three key positives to see? One is volume. Clearly, that is the underlying factor. How your economy is growing, that's what will also drive you. Clearly, in our opening remark, we've discussed that better the economic growth, better the income generation for people, and there is clearly, like the data point which I've given, there is a clear link. Higher the income, higher the volume growth. That's where the confidence lies, and associated with this is the profit. But third and most important factor I would want to point out, if you see because we've seen high inflation in the commodities, your steel, your aluminum, rhodium, which also goes as a cleaning mechanism, which goes in the engine for reducing your emission. All these, as you see these commodities softening, you will see this entire benefit would be sitting with the manufacturers, or the substantial part of this will be with the manufacturers, and which is where you will see profitability significantly improving for them, right?
Sachin, can you hear me now?
Yeah, the next question is about how the whole buzz around EV is shaping up and how will it affect the auto industry overall. My sense is that obviously, like I said, the first level of penetration will be because there is a good amount of support from the government. This will be more for the scooter as a segment. Rest of the category, the journey will be a lot longer for the penetration to go up. But let's say the complexity as far as two-wheeler is concerned, I will still call it is less. They are relatively easier to design, but the complexity in four-wheeler is lot more challenge, which is where the good amount of innovation is yet to come. But remember, just don't focus on EV. I have not spoken about it, but there are alternate piece which is doing well. What we have seen, CNG as a category, the penetration has increased substantially. So CNG as a category, let's say 2 3 year back, was just 4 or 5% of the overall vehicle sales in four wheeler. Now that's gone up anywhere between 15 to 20%. Certain segment of commercial vehicle, which is again very interesting. There again, we have seen the penetration of CNG has gone up by almost gone up to 30 to 40%. Now, remember, this is also happening not just because the cost, it's cheaper to run on CNG versus petrol or a diesel. It's far cheaper. But in across the categories, be it four wheeler or commercial vehicle, but the government is also pushing it and setting up infrastructure across cities. So that's also helping people gaining confidence in those vehicles. So and finally, there is good amount of work which is also happening on the hydrogen fuel cell. So that's also one technology which will emerge over a period of time. But yes, certainly the EV penetration will improve. But ICE as a family, which is the petrol and the diesel, is here to stay for a lot more years, right? Um, can foreign players such as Tesla into India affect market share of Indian players? Now, see, remember, you're good in pointing out whether the foreign players will affect Indian market or not. There are two or three factors which clearly work across the market. One, you've taken a name of Tesla. I will being on the platform, I will not want to be name specific, but yes, some companies are doing fantastic job, not just in design, in ecosystem, but they are also done. The brand has done very well. Few specific brand because they are offering very efficient fuel, efficient to run vehicle as well. So but apart from that, remember all these success that we have seen, especially on the or the passenger vehicle side, is on higher ticket vehicles, not necessarily which the Indian market can afford, right? Remember, compact as a segment for India is close to 81, 82%, and this obviously includes the new SUVs that we see. So compact as a segment is very large, which means clearly what Indian buyers can afford is also limited. So when I say compact, basically it's the price range of less than 10 lakh, but let's say large part of the market, what they can afford is less than 15 lakh. But in Indian market condition, if you were to compare ICE versus EV, the cost of, let's say, if you want to give a good, decent range vehicle, the cost of the battery itself will be very, very high. And remember, there is hardly any subsidy. It's just that the GST rates are quite moderate in case of four-wheeler. So that's the only arbitrage which is available. So if you keep that perspective in mind, and especially on top of that, availability of charging stations across the country, and remember the other big challenge in this industry is that most of us in cities may not even have a dedicated parking infrastructure. Forget about dedicated charging infrastructure. We don't know where the vehicle will stand. So there are a whole host of multiple challenges, and especially the most important challenges. Remember when a buyer, because a normal person who is driving, he when he does the full cost economics for himself, maybe if he's not running for more than 100 kilometers a day, he may find it difficult to justify buying an electric vehicle. This is 100 kilometers into, and I'm just giving you work ballpark number, but 100 kilometers into 365 days, that's a lot of us. Not many of us would be driving even closer to that number, which is where the big challenge in terms of justifying buying these vehicles. Forget about the other challenges. So, but with the cost coming down, we will see penetration actually going up. But the key point which you asked about foreign manufacturers, remember even in the ICE family, foreign manufacturers, everyone has tried. But the one who is closer to see, it's a cost of it's a matter of philosophy. If you develop a vehicle for let's say US market, or you develop a vehicle for China market or Russian market, those vehicles are specific for those markets. You cannot just plug and play in India, which is where we've seen many foreign brands or foreign vehicles have not done so well in India. You need to design the vehicle which are more specific for Indian condition. You need to, more importantly, service them. And when you talk about servicing these vehicles, comes the challenge of availability of spare part. If you are driving it for a daily office use, and if I tell you that, hey, there is a bump in your car, or your battery, or your light is not there, I will take 30 days to replace it. That's what will switch off the investors, and that's where the resale value of these cars go down, and which is the real challenge, and which is where you need to be lot more closer to Indian market, create vehicle which is more suitable for Indian condition, service them from Indian perspective. That's what will create a suitable proposition. And remember, in India, the leader is again a Japanese player, or the second one is also a Korean player. But they've learned the trick much better. But the rest have come and gone. So that's the real key for the success. Uh, does the auto industry seems to be undervalued or overvalued overall, right now? So I'll just reply. See, because your profits, what it used to be in FY19, has completely collapsed, because neither the operating leverage is there nor the gross profit margin is there, because of the new regulation, new cost, inflation, everything put together. So if you look at from the profit terms today or next year or even next year, you will still see that the profitability is not to the normalized level. By this, I mean to say industry is following certain growth path. You should catch up to that growth path in future as well. So which is where I will see, if you look at from very near term, you might find that many of these companies expensive, but you have to look at from the normalized profit perspective, and which is where I find value proposition in most of these stocks. And remember, these are high ROC, ROE companies, cash flow generation companies. So it's a good quality pack that you would be investing in many of these companies. Not all of them, but many of them, right? Um, would you consider exit of US auto market, exit from Indian market, as it is a negative sign? I won't count exit, consider exit of US automakers or exit from Indian market. I won't count. I have already answered them. If you try to impose your foreign vehicles on the Indian consumer, obviously it's a very proven thing that it's a failure proposition in India. You have to create product for Indian consumers. Be close. See, consumer is the king. The buyer is the king. If you give them the right solution, they will appreciate it. And which is where you will find all across. So the laptop you use is not an Indian brand, or in many of the cases, the phone we use may not be Indian brand. You have to give a consumer specific solution and the service as well. Karthik, you need to actually tell me when is the time to stop. Otherwise, I'll just keep taking these questions. Yeah.
After next two
So
questions,
you can actually put it on the chat as well, or tell it to my colleague. Not able to hear. With So one question is with respect to new age companies trying, and will they create new age companies trying for electric two-wheeler, and will they create winning proposition? So remember, even so, I was just looking at my sheet on the Vahan data, and I could find there are 49 odd players who are offering two-wheelers, especially on the scooter side. There are few for motorcycle as well. But this is a long list. But when I look at the leaders, the let's say the old hands, not necessarily the listed guys, but old hands who were anyways dominating this electric space are still continuing to dominate. And that's where the trick comes. It's not just introducing products, but understanding the need of the customer. So if Karthik buys a new vehicle, assuming that the touch screen will work, the brake will work, and everything works, but just imagine if you buy a vehicle and the touch screen stops working, no, let's say next after a month, and your manufacturers will say, yes, sir, we will fulfill our promise and we will replace it, but he takes a month to do it. And a month after that, let's say a light goes off, and then he takes and he says that I will take another month to do it. You as a customer, it's a bad experience, right? What you need is, let's say, Karthik bought a scooter, electric scooter, scooter, the touchscreen gone. Manufacturer says, yes, we will fulfill next day or 2 days. It's done. Next time if something has gone wrong with the lighting system, it's done in 1 or 2 days. That's what will create good experience, right? And that's where you will say the next buyer, let's say in the first proposition, Karthik is upset. He tries to go sell the vehicle. He may not get a good price for that, because the next buyer knows that it's not a good feedback, because all of us are well connected now through net. But let's say in case two, Karthik gives good review. Karthik would anyways would not want to sell it, right? So the supply itself is less, and the reviews are also good. So that's the ecosystem. It's and plus the dealer network. You need to be well spread out. There are lots and lots of such challenges, which is where I will say the real game will still be with some of these leading guys. But obviously, winners keep getting created. You can't say that because I am leader today, nobody can come. No, but we'll have to see who develops these ecosystem well and who enlightens the end consumer. Yeah, Karthik, I guess we are running out of time.
yeah. So we'll wind up with that. Thank you so much, Sachin, for giving us a good insight into automobile as a sector. Automobile as a sector, if you see, contributes to 50% of the overall manufacturing sector's GDP. So it's a very big sector to ignore. So thank you so much for giving us the insight, and thanks everyone for joining in. Have a great weekend ahead. Thank you.